Good morning, everybody. Happy Tuesday. This is the morning show on Stock Market TV. Spencer, JC, Steve, Alfonso, just making sure we're live. Are we all good on the YouTube? Yes, we're good on the YouTube. We're good on the Twitter. We're good on stockmarkettv.com. On today's show, Kenny Glick, Mike Akins from ETF Action. We'll talk ETFs. It's going to be fun. I love ETFs. My favorite thing in the world. Phil Perlman will stop by as well. We got a lot to get to, so let's get to it. Bring on the boys. And if you're watching, drop me a like. Oh, quick programming announcement before I bring on the guys. If you didn't get an email about it yesterday or you didn't hear about it, it's totally fine. We're doing an encore live event today. If you were here last week, you probably saw or heard about JC going live with Olivia Vaz, talking about her SPY strike strategy. Well, turns out the very next day, we didn't know this at the time, but the very next day, she found a 51% winner. So she's going to talk about that with JC today. That's at 2 o'clock Eastern time on our site, not on YouTube, on our site. The link is in the description. I'm dropping it in the chat right now to register for free. Get the watch link again today, 2 o'clock Eastern. That being said, let's roll the intro. Here we go.
Good morning.
Spencer, ETFs, your favorite thing in the world?
Like a top 10 favorite thing in the world.
Top 10 thing in the entire world are ETFs.
In no particular order, bacon, Costco, ETFs, the Jersey Shore,
Wow. What do you think about that, Strazza? Do ETFs make your top 10? They don't make my top 10.
Sushi, the Yankees,
Who's your favorite person to eat sushi with, Spencer?
Probably you.
What's up with dude cheerleaders for the Vikings? Are you in favor of male cheerleaders in professional football? Are you in favor or are you against it?
Well, that's the thing in college, isn't it? Male cheerleaders.
I asked my wife about this because my wife was a cheerleader in high school and in college, and now she coaches the 4-year-old cheer team, so she knows way more about cheerleaders than I do.
That's the thing.
And she says that the big schools have like jacked dudes to help the cheerleaders, not like skinny, flamboyant cheerleaders, but like the dudes that throw the girls up in the air and stuff like that. She says the bigger schools have that.
Yeah.
Someone should ask Sam. But yeah, the cheerleaders, the male cheerleaders at D1 schools are just really sick athletes who couldn't cut it.
Yeah. Yeah. Or just want to hang out with a bunch of beautiful women, which I don't blame them for that.
People
I see you, dogs. I see you.
People will make fun of the male cheerleader. It's probably the best move ever.
Yeah, don't do that. Don't make fun of the male cheerleaders.
That's like being like a straight guy on Broadway. Like imagine being a straight dude on Broadway, you crush, right?
Right. It's the same thing.
Same thing. Sure. I don't like it. When I was a little kid, I remember my dad I used to have season tickets to the Dolphins and the Hurricanes my whole life. And then, during commercials and the cheerleaders would dance, my dad would give me the binoculars. He'd be like, here, take a look. Those are shout out to dad. That was a good dad move right there, right? Like, here you go, son. Take a look at what's going on down there. Right?
Yeah.
Is that not good dad-son bonding right there?
And you'll do it for your boys one day.
Hell yeah. I almost did it the other day, actually. They're two. They're a little young.
A little bit.
I think that's just creepy, right? At this point.
It's a little creepy.
7 or 8, that's when it gets going, right? 6, 7, or 8?
Yeah,
I don't know.
I don't know.
Tell me.
I used to always know when the Sports Illustrated. I subscribed to Sports Illustrated, and then the swimsuit issue was just always had already been looked through by the time it got to my room.
Oh yeah, and you waited for that. It happened in the summer, and it was like a big deal when it came out. You and your friends would go to the mall and buy the swimsuit edition. That was the thing.
Once upon a time, I was an intern at Sports Illustrated, and one of my I was a social media intern to be specific, and one of my tasks
kidding.
was to plan the social media calendar around the swimsuit edition launch and all the tweets we were going to tweet and all the Facebooks we were going to Facebook. Right, this is kind of before we didn't really do Instagram at the time; it was mostly Facebook and Twitter. And yeah, I had to write all that stuff out and then schedule it like a month in advance. Yeah, fun job.
At a certain age, I started subscribing to Playboy, and I think it used to come once a month, if I'm not mistaken.
Yeah, for the article.
And then it would come out like the magazine had like a black cover on it, and then the wrapper, so you couldn't see the cover. And then I used to always know who got the mail that day, because if the cover was still on, my mom got the mail. If the cover was off, Dad got the mail. Right? You know?
Yeah.
Nice.
That's funny.
Should we state some markets, please?
I think we should.
Eventually, one of these years.
All right, ladies and gentlemen, we got the Dow futures up 200. This just happened actually over the last couple of minutes. Was there one of those fugazi numbers from the old federal government? I think
we just did a thing.
We just did a thing. All right. So whether it was inflation or jobs or any of those things that we know are incorrect, and they're going to revise
it was one of the inflations, JC.
It was one of the inflations. What is your favorite inflation? I like the stagflation because I went to Fairfield University and we're the Fairfield Stags. So of all the inflations, stags are my favorite. What about you, Strazza?
I'm a disinflation kind of guy. It's really
that's a good one.
What's best for me. Spencer,
that's the smart guy answer. That's the smart guy answer.
That's a good answer.
Okay, hold on. Let's finish the state of the markets, and then we'll get to it. We got the Dow up 200, up 0.5% on the day, 44,300. S&P's up 0.5% as well, 33 handles. That's 64.33 to the upside. Nasdaq 100 leading the way, up 0.2%. It's 160 points, 23,800. 30-year bond futures flat this morning at 115. You got crude oil down 0.75% at 63.5. Copper up 1.25% at 450. You got gold down a smidge at 3,400. Silver flat at 37.75 with the VIX down towards 15. Still pricing in less than 1% daily moves for the S&P 500. First time since the spring. And so in funny money land, we got Bitcoin up 300 today, 119,000 even. You got the old Ethereum. Pushing 4,400 up 4% this morning. Ethereum absolutely good. Ripping. Solana, you got Solana up 1.5%, 178. But the total crypto market cap, Mr. Spencer Israel, 3.93 trillion. What stands out?
The thing about cryptos is that they like to dip before they rip, and you really got that over the course of the past few days. And this could be it. You look at Ethereum here, JC, and you say, wow, what a logical level of overhead supply, right, for this rally or this uptrend phase to kind of pause and sputter out. Also, what a logical level for a just major breakout to take place out of a high and tight bull flag. So it can go either way. It's less about, you don't want to be too predictive when an asset runs up to a key level of support or resistance, right, what we call polarity zone. You more want to say to yourself, okay, this is an important level. I'm going to judge the reaction. There's going to be that much more information in the way that price behaves here, as opposed to, having some preconceived notion about whether or not that support or resistance zone is going to hold or not. Instead, approach it with an open mind and more so take that information from it. So I think just as easily as the recent rally in Ethereum could, fail and falter here, you could see a major breakout to and through this level.
Throw up slide 2, please, there, Mr. Spencer Israel. You got the ETH BTC ratio making new 6-month highs. ETH BTC hitting new 6-month highs. And then the biggest beneficiary of all of this, go to the new slide 3 there. Nope. Go to the new slide 3. The biggest beneficiary of the complete and utter dominance from Ethereum since the spring have been the crypto punks, new multi-year highs, $235,000 Excuse me, that fake news. $241,000 as we speak for the floor price of CryptoPunks. How do you feel about that, Mr. Strazza? As somebody who has been very interested in buying NFTs, how do you feel about this?
I hate these charts, JC. It's hard for me to look at them. I lose my train of thought. It's actually hard for me to hear your question when you
Got it.
throw up
So it's the
charts.
chart
It's
that makes you lose the
ugly.
train of thought, not the alien with the cowboy hat.
That's ugly too. I don't understand
The
why these
aliens
are
are
worth
worth more
anything.
because they're more rare.
Do you think they said, "Hey, let's make the worst internet art possible and charge the most for it"? And it's one of those like reverse psychology.
Well, to be
Humans are
clear, they
stupid
don't
things.
charge anything for it.
Well, they're
This is the
charging
second.
high prices for the punks these days. Based on
This is the
chart.
secondary market. The people who
Yeah.
created it were not charging things, right? This
Well,
is the secondary market, supply and demand, my friend. Have you heard of
somebody's
such a
making
thing?
that money, JC.
Okay, so for those who are not active CryptoPunk holders, we've been talking about it for years, and here we are, multi-year high. So everybody had plenty of opportunity. So it's not like I'm cherry picking. But do you
For
want
the
the next one, Strazza? Do you want to know
for
the?
the for the rest of you normal humans, yeah.
I'm thinking MFers. I'm thinking MFers might be the next ones.
All right, so you're branching out. You're going to diversify your bonds.
I've had an MFer.
Oh, you have.
Oh, I got
How many
MFers,
different-
me bits. I got NFTs, bro.
How many different ones do you have, JC?
I don't know, because if you own NFTs, then you get airdropped other NFTs, right? So as
Okay.
somebody who owns a CryptoPunk or has owned several, I get
Okay.
sent shit. You
So
know,
it's a fucking pyramid scheme.
it's like I am an NFT influencer, Strazza. People
Oh.
just send me shit.
You're really not though, because for as many NFTs as you own, you don't talk or write about it as much as I would think.
No. It's on the blocking chain. So I'm an influencer on the chain.
I
It's not
understand. No, I
about the YouTube.
understand. I get it.
This is on-chain influence. And
No, but I
whether it's
like
true
it.
or not, that's not the point. Whether I'm an influencer or not is not the point. On-chain, mathematically, I am. So
No, I'm
people,
saying I like it when you talk about it. I don't think you talk about your NFTs and what you've done there over the years enough.
okay, well, it's all on-chain because it's a public ledger.
I'm
So anybody
saying,
has,
okay,
you know,
nobody's looking at your blocks and chains.
I
Okay,
don't
I'm
know.
saying for your readers and the viewers of the show, it's interesting.
MFers. I'm telling you. I'm telling
Yes.
you.
Okay. Uh-huh.
Check out the MFers. They're $2,000 right now. They're still below. They're still below the 24 highs and 23 highs. Big base of accumulation. If you're looking to get in the NFT game, I might pick up. It's called a sweep when you buy a whole bunch at the same time. I might sweep some MFers today.
How much to get in?
$2,000.
That's it. These are cheap. So we're trading junk. These are the micro caps.
No, MFers down the market cap scale. MFers are number 50.
Oh,
So
that's not
CryptoPunks
bad.
are 1. MFers are 50.
So like, what would be like a reasonable if I wanted to dabble in the top 10? What would be like a blue chip alt NFT?
Well, historically, the silver to CryptoPunks' gold would be the Bored Apes.
I don't want that. Nobody wants that.
I mean, they're a real piece of hot shit.
Yeah.
They're down at 57 from a low of 20. So they've almost
like the
tripled off the spring
Tesla.
lows.
They're the Tesla, right? Wild child.
You know, they got a little too crazy. You got the pudgy penguins; those are hot these days. I
want
got
the
a
Microsoft
mutant. You can go with the
of NFTs.
moonbirds. The moonbirds is just, the Azukis are popular, particularly in Asia.
I don't know what you're saying.
You asked. Did you not ask?
Hmm.
So I answered the question. All right, so that's where we're at. Big move this morning in BBAI. Steve Strazza, I don't know anything about Big Bear. All I know is that this is the type of market environment where companies that have an animal in their name tend to do well. This one's down 30% and it has the word bear in it.
So
is it the wrong animal? Do we need to stick?
No,
stick to other animals and avoid the bears.
it was the right animal for a while, JC, and this doesn't come as a surprise. I'm taking a bath today, but I've already sold more than half of my position. We got into this in the high threes when it was coming out of a nice base. Made, at the highs almost 150%. in this trade. A lot of it was done through options. My warrants are going to get crushed today for sure. But you just size these positions appropriately. We talked about it, and if you drop my post in here, I make a joke when I talk about how it was a big trade for me about a month back. I joke about how it's not the next Palantir and how all of the hyped up things that they're saying about this stock are not true. And the fact that the stock is down 30% on an earnings miss, frankly, doesn't come as a shock. Their CFO walked like a couple months ago with no other job on the table. It's like the easiest red flag ever.
Yeah.
These are the kinds of stocks that are working until they don't. Unfortunately, the BBAI train, this story ended a little bit too early.
Can you talk about the selling half, taking half off the table on a double? Obviously, you did that here, but just in the general, this is a good example as to why you do that. But can you talk about that thought process? Because this is something we learned from Sean. This is something that Sean learned from the Tasty guys over the years. This is a debate that we have had for many, many years. I like to incorporate that myself. You certainly do in Breakout Multiplier. We've gone back and forth where sometimes Sean says it's the time to be greedy and not take half off the table. There are times when we've said, let's be greedy. Let's only take a third off the table on a double. But the benchmark move is selling half on the double. Tell us why.
First of all, just as a general rule, in trades, you have to approach them with the mindset of selling. I'm selling every day. And if I start buying too much, something like triggers in my brain. I'm like, you got to go sell some stuff. I'm always selling. I'm always taking profits, always scaling out of stuff, always paying yourself when you're right. For BBAI, we did do a lot of options with this. So we sold quick doubles, took our initial risk capital, got it right back. And then it's more than that, JC. For something like this, where the stock goes on, like I said, we bought this in the high threes, low fours months ago.
I'm looking at a June 24th post when you sold half off the table on June 24th. Yeah, you got a legacy half position there?
Yeah, but no.
Had a legacy half position?
Less. When something like this runs, that well for that long, you pay yourself along the way. So it's more than selling half. At that point, it's irresponsible not to sell another half, right? Or another quarter or another third. And just pay yourself as you go. Especially when you're in calls and you have that time value working against you, that theta decay, especially if you're not in the money, right? So as you approach expiration, you want to own those less and less, all things equal anyway. So you almost want to be...
This was a 10x. Right?
More than that. Yeah. On a couple of them. We bought a couple different contracts, 2 or 3 different contracts. I think they all went 10x. But yeah, if you don't pay yourself, you give that money right back, which I'm doing a good deal of today.
Speaking of paying ourselves, you see Agnico? Throw up slide 4 there. Look at this chart, tell me there's a gold miner out there that looks better than this. Come on.
I'd rather have the first Majestic, AG.
Why?
Because I'm biased towards that as a vehicle, and also it's coming out of a perfect base. And they're
looks great too, by the way.
They're like the wild child. They're crazy. They give you that juice, and I'm all about that juice, Jay. So you know that about me.
I do know that about you. I like that about you, actually. That's why you've been the chief YOLO officer.
I appreciate that.
Remember, don't forget where you come from. Just because now you're the chief strategist of All-Star Charts and now you're a big deal, don't forget that you were the chief YOLO officer. Don't forget your roots.
That's right. And you do, to become the chief YOLO officer, you do have to feed the ducks. So I like to see this. Like Robert, yes, his ducks were fed properly, and I love to hear that.
Nice job, Robert.
There's some people in the chat, and I can feel this too, who are hurt today because they didn't sell enough of their BBAI, and now they're giving back way too much of those profits. And that sucks. It's a shitty lesson to learn.
Yeah, but
I'm also happy to see that.
Correct me if I'm wrong, Strazza. You've been there, which is why you feed the ducks on the way up.
Yeah. Listen, I'll lose money today, but I'm still making money on this trade. I'm still going to make money on the shit positions I have left that I get out of today. Right? So, it's fine, and it still sucks, JC.
Yeah.
It's a bummer.
Yeah. I mean, it's life, right? Let me I want to reiterate something really interesting here. Could you throw up that slide 5, please? This one coming from our friends over at Goldman Sachs. looking at the short positions by hedge funds in the futures market for the Russell 2000. Never been larger, Strazza. They hate them. They hate them. Over the last 4.5 years. By the way, the Russell ETF IWM right here, right now, is at the exact same price it was in February of 2021, 4.5 years ago. Since then, the large cap S&P 500 and NASDAQ 100 are averaging 16% annualized returns during that period, 16% per year over the last 4.5 years. Russell 2000, squadoosh.
JC, that's great. That's a great stat. I love it when they hate them. And just to be clear, this is specifically the Russell 2000 futures positioning, right? How would this chart look if it was one of the large cap indexes? Nothing like this, right?
No, actually, they're super net long NASDAQ. So the trade that the futures traders have on is super net long NASDAQ, super short Russell 2000.
Is that
wouldn't it be unfortunate for them if it unwound in the opposite direction?
But wow. Huh.
Yep. Super net, the speculators super net long NASDAQ futures, historically short Russell 2000 futures, and then the commercial hedgers are doing the opposite. The commercial hedgers, the smart money, have never been more net long Russell 2000 futures and are short the NASDAQ.
And, you know, just historically speaking, too, that's probably a pretty unique scenario where they're super long one and super short the other. No?
I mean, they're playing the spread that we know has been working for so long, but, you know, to me, they've overstayed that welcome.
These trades that work for forever, they end up working for too long sometimes, and they get very crowded.
Here, I'll show you the spread. So this is what the spread looks like between IWM and the Russell 2000. Yeah. So, I mean, you know, when you look at the positioning, you know, if I'm going to be in something and I'm going to get in something, I want to see where the market is positioned. And if everybody is already in that, then I probably don't want to do that. You know, the herding mentality, Steve Strazza. You know, I know I'm reading Richard Thaler, so I got plenty of behavioral economics in my head, even though he hasn't mentioned herding. You know, that's part of it. Throw up that slide 2 there. Wow. Maybe he mentions herding later on in the book. I haven't gotten there yet. But the herding mentality here, this dates back to our ancestors. This goes back to, you know, human evolution. Humans wanted to travel in herds for safety purposes, right? For protection, for social purposes. We're social beings. We want to be, you know, as part of a community. That's really important. Also for, you know, accumulating, acquiring natural resources and, you know, hunting and gathering, right? It's better to be with a group doing it than just be there by yourself. And so, you know, this day and age, we still have that engraved in our minds, and we still behave in those ways through communities and in herds. And, you know, it's a very, you know, while that provided safety to our ancestors, it's actually very dangerous behavior this day and age, particularly in the market. And I think that's what we have going on here, Steve Strazza. I think the folks are just very comfortable in this herd that is betting on small caps underperforming large caps. I think it's a dangerous community to be a part of, my friend.
I'll tell you what's going on here. These charts, all of these ratios come down to concentration. I've been around long enough to hear people panic and see my inbox flooded with bad takes about the relative trend in small caps and what it means, or the relative trend in the equal weight index and what it means. Here's the thing. When you're looking at any of these relative trends, any of these ratio charts, ask yourself, is one of them dominated by a small handful of stocks? Does one of them have, you know, just huge concentration? That's the one that's going to be doing the driving in these ratios. So you can overlay stuff. What we did here is a little bit interesting. We removed the equal weight impact from the relationship to show it's not about the equal weight index. It's about the cap weighted indexes, right, that are doing the driving here. It's about the most concentrated indexes. So mega cap growth is outperforming the cap weighted S&P 500 in the same exact way as the S&P 500 is then outperforming the equal weighted S&P 500. And the bottom line is, if you just look at these different funds exposures to the top 10 stocks in their funds. For mega cap growth, it's like 60%. For the S&P 500, it's like 30. For RSP, it's like 5, like 3% or something, right? So that's what's going on with these relationships. And small caps would be in the same category as something like the equal weight S&P 500 here.
Are you betting that this unwind has begun, or are you waiting to see something?
Here's the thing. It's not going to really affect what I'm doing.
No? Biotechs, regional banks, nothing?
No. Because the indexes don't tell you much about
that BBIO coming back after last week's sell-off?
Right. And here's the problem. The index, the biotech index and the price action there wouldn't have told you to go fishing in that pond and to get into BBIO. You almost can't use it. Some of these indexes are just not created well. You get what I'm saying, JC?
I'm in it.
No, but there's never been any notable relative strength there in biotech. Yet you look under the hood and you have a stock like BBio, as good as anything, right? So like, it's not that there's not stuff there that's working, it's that there's too many damn biotech stocks dragging that index down. Same with banks, too many damn stocks. So the good ones, the impact of the good ones gets muted out. No? Same problem with the Russell 2000 in general. Same reason why the NASDAQ 100 looks better than the S&P 500.
I don't know.
Sounds like more concentration.
Coping. Sounds like coping.
No.
Yeah.
This is the world we live in. That was the name of my post. It's a cap weighted world. You say.
Yeah, I don't know. I don't know about that. I don't know about that, Strazza. I think that's a cope. What do you think, Spencer? Is he coping?
What do you think I'm coping with?
No, I don't think that's.
I'm right.
I don't know, Strazza. Smells fishy. What do you think in the chat, guys? You think Strazza's right, or you think there's a turn coming? Smells fishy.
But the turn doesn't matter. Do you get what I'm saying? I'll be buying or not buying the same amount of small cap stocks, regardless of what IWM does. IWM doesn't look like the small caps I'm buying. Drop the minor leaguers report. It doesn't look like the small caps that pop up on our scans, right? Same with these biotechs. Same with Blue Bio. JC's talking about a biotech leader. That's a great looking stock. It's a leadership stock. If you were doing top-down analysis,
by the way, it's not even a small cap. By the way, BBIO. It's like $10 billion.
The point is, to find some of these things, you have to do bottoms up. Okay, especially with a group like biotech that's frankly just overcrowded and full of crap.
I guess we'll see. Smells fishy.
No.
You're the fisherman from the Keys. You're the Florida man, a resident Florida man. You should know the smell of fish better than us up here in the Northeast. Smells fishy.
Best fish. What's the best fish?
Bluefin tuna, obviously.
Ooh, yeah.
What else? What would be? I don't even know what number 2 is.
Do something fun. Give you like a flaky white fish, like a yellow edge grouper or something. I don't know.
Bluefin tuna, or get the fuck out of here.
No, it's a good answer, Jason. It's hard to argue.
The only answer.
It's a good answer. All right, let's bring on today's guest. We got Mike Akins in the house, founding partner of ETF Action. He sent over a few charts, kind of showing the craziness that's happening in the ETF market right now. We are living in a bull market for financial engineering in ETF land, and that's fun.
What could go wrong?
What could go wrong? That's where my head's at. All right, let's bring Mike out, see what's going on.
Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Hey, Mike, how are you?
I'm doing well, gentlemen. How are you?
Doing great. Doing great. Just talking fish. What's your favorite fish?
Oh my goodness, that's a tough one. Probably trout. I'm a Midwest boy.
Trout. Wow.
Yeah.
Dude, I had some smoked trout the other day. One of our cousins does some fishing upstate New York, and then they smoked the trout with like they put like maple syrup in it or something like that. They smoked the trout and you just eat it right out of the bag. Woo, that was good.
Yeah, you can make some good trout dip smoking.
Nice.
Right.
So this ETFs, this shit is bananas, huh?
it's going crazy. I mean, everything works in a bull market, but I think there's a lot of good stuff going on. But it's a really interesting market when you look at the flows in the ETF world and the types of products that are coming to market, you get in a really interesting dichotomy of products financially engineered to protect you from the world collapsing, and products financially engineered to go ballistic when you're in a bull market. So it's going to be an offsetting concept, I think, here at some point, but it's pretty wild.
Can you do me a favor, Mike? Can you just fill in the folks as to your perspective? Like, can you tell them about your day job, what you're doing during the day, so that they understand, like, through what lens you're viewing the market?
Yeah, so ETF Action at its core is a data analytics platform. We do look through deep dive analytics on the ETF market, everything from high level trends of following the flows, understanding what types of products are coming to market, to doing in-depth analysis on what types of companies are held across different categories. We maintain really niche category systems so people can, hey, I want to know what metaverse and Web3 stocks are. Well, there's, a handful of ETFs that track that. We put together guru lists, if you will, or all-star lists of stocks that track those. So we kind of leverage the transparency and the growth of the ETF markets to cover the traditional markets through the lens of ETFs, basically. Our clientele really is on the financial professional side. Most of our clients, from a subscription base, are financial advisors using our platform, from everything to finding strategies and doing Reg BI compliance to more sophisticated issuers. We work with over almost 20% of the ETF issuer market as a client in some size, shape, or form, using our platform for competitive analytics, for understanding ownership trends of what types of institutions are buying different products. But we're a tech stack, but really what we do and where our value add to our clientele is how we dissect the data of the ETF market.
And what's the biggest trend, or what are some of the biggest trends that you're seeing out there? Like, what stands out today, August or summer 2025? Like, what's been the big thing happening?
So if I was going to say break it down into three trends. Let's start with the trend that kind of follows the most traditional markets, investing, traditional stocks and bond strategies. I think active passive is very interesting right now. Not only because I think, you've had a lot of changes in ETF regulations that have made it easier to launch active type products. That's led to more strategies, but a lot of the big players are coalescing that have, resisted coming into the active space. The really big names, MFSs, T. Rowe Prices, the folks that are John Hancock's that were late to the game, but have massive distribution teams, Fidelity, and they're bringing their products that have been very successful track records in mutual funds into the ETF market. And those types of strategies are being bought quite aggressively right now by the financial advisor community. So if you look at those active funds and look at their ownership of that from a 13F filing lens, they have very high 13F ownership. So to give you a sense of what that means, ETF market's $12 trillion, about 60 to 63% of the entire ETF market can be traced back to 13F filings, right? Wow. So a big chunk of that. And that's even higher the more traditional you go. And it's much higher yet when you look at those active strategies that are being picked by these financial professionals in some size, shape, or form. So that's a big trend we're watching. It's developing. I like it. I think it's really healthy for the market. I think that there's a lot of things to be said at the right price. A lot of these active strategies are just more day-to-day management of smart beta, right? If I've got a value strategy and I'm an active manager, I'm still doing some sort of screening. I just can make changes as I go. I can trade on a daily basis, not on a set rebalancing schedule. There's a lot of positives why it makes sense, especially if the price is right. So that
can you explain what smart beta is?
So it's a term I hate. But
I'm more of a dumb beta kind of guy.
It's a buzzword from yesteryear.
Yeah. So strategic beta, whatever you want to call it, factor investing, right? You're just applying a screen to say, I want value and I think of value with these types of screens. I start with the S&P 500. I apply an overlay on valuation of next 12-month earnings, blah, blah, blah. And I get down to some sort of bucket of stocks that fit that value lens. Most active strategies have a stated objective of being value or growth as well. they're doing the same types of screens to get down, but then they go that extra step and say, let's look at the management team. Let's look at filings. There's rationale to that. And I think, it doesn't really matter in a bull market as much as it probably will when we have a reset. So active management will tend to be better in that period. But really what's been the difference between active and passive?
Is it better?
Well, I think what's been different, the biggest difference between active and passive in broad return basis, like if you look at the SPIVA reports, the number one factor, it's not huge differences, right? You're not 50 basis point difference between active and passive and SPIVA could completely turn things around. So now when you're talking about products that have 30 basis point expense ratios for large cap value instead of the historic 1%, 1.25% expense ratios, it does change the game a little bit. And I'm curious to see how that plays out in the ETF wrapper. So that's trend number one. That's kind of the non-fun, non-sexy trend that's happening that we're following on a regular basis here at ETF Action. Trend number two, I think, is the financial engineering side of the market.
Let's bring up that slide 16, please. Can we bring that up? This is just an insane. I don't know if maybe insane is not the right word, Mike, but so just for people that can't see here, we'll make it a little bigger. So the yellow on this chart is leverage and inverse funds. Those have been around for a while. Those are not new, right? But the orange is these synthetic income, and the green is buffer ETFs, and those are new and exploding in size and popularity. So, what do you think when you see this chart?
Well, I think one, the rules have changed. So it's easier to launch these strategies, right? The rule 11, I always get it wrong. 6C11, basically the ETF rule, made it easier to bring out a lot of things. There's an additional rule with regards to 19B4 filings. Ignore all the technical stuff. That's just made it easier to bring these products to market. In some size, shape, or form, these have existed for decades, right? Buffer ETFs, there's been structured products out in the market for years that financial advisors could gain access to. I think the ETF wrapper is more transparent. It provides a little bit better vehicle to get access to a buffer strategy. And when I say buffer, it's a strategy that's simply saying we're going to set a cap on how much you can lose in your strategy in return for giving up upside, right? And you can debate all day long whether that's good, wrong, or indifferent, but there is a sales piece to that, when you go into somebody who's in retirement, who wants to keep some sort of allocation in the market, but is worried, the most important thing to them is preserving capital. It's a pretty good sales story. It's a pretty good mousetrap to put somebody into. Synthetic income, again, those have been around forever. Covered call strategy, put right strategies have been around for years. It's just coming into the ETF market. And we're seeing that maturity of the ETF market. And then leverage inverse, they've been in the ETF market for a long, long time. But they've kind of been plateaued out at that, call it $20-25 billion range for years and years. And then post-COVID world, it's just exploded. Not only just your traditional TQQQs and 2-3x S&P 500, but you can get 2x all of the high vol names in the market now. So that piece of the market, I think leads into some of the other more traditional metrics that we watch, like the fact that the NASDAQ is now 100 is trading, at a greater than 6 handle on the forward price to sales, 35% weight basis of the companies inside of the NASDAQ. Did I lose my camera? You guys good with me?
No, we're good.
Okay.
You might be frozen.
Sorry about that. Okay.
Yeah.
So, you look at those valuation metrics. I think those two things line up hand in hand, right? A lot of this financial engineering of I want leverage, or I'm going to write, covered calls on the most volatile stocks in the ETF market. A lot of that I think can go hand in hand with what we're seeing in the traditional valuations of the market potentially being at extremes, right? When I say NASDAQ's trading at 6.3 times next 12 months sales, that's rivaling the top of the tech bubble when we were at like 7.2, for the NASDAQ right in March of 2000 before things started to fall apart. I'm not calling that. I think the market fundamentals are not a technical data point, but they do give you a sense of how far things can go down if there's a catalyst to drive them down.
What do you say to someone that sees this table and goes, "Oh, this won't end well"?
I think they're probably right.
Really though? Really? Because one of the things I like the most about the ETF market is that the public will decide. The investing public will decide if something is a good idea or not, and they'll decide with their assets. And if it's not a good idea and the assets don't come, then the ETF or whatever dies on the vine, right? And that's it.
Yeah, so I'm 100% on board with you on that, right? I believe in providing tools to the market as long as they follow the rules, they're transparent in their disclosures. I think more choice is great. When I say I think it won't end well, I think most people that are, really going aggressive into their allocations of leveraged products and or writing calls on, micro strategy or whatever it may be, the pain of a real drawdown will be really hard for most to weather and then see the other side of it.
That's true.
And that's what I mean by, you have T triple Q, NASDAQ pulls back 30%. I mean, math is pretty simple, right? You're getting close to 80, 90% down. And if that all comes out at the bottom, that's a scary proposition.
Yeah, that's true. Okay, wait, can we bring up slide 17, please? Because we talk about this all the time, and it really it boggles the mind. The assets that have flowed into these crypto ETFs, is it greater than you could have even imagined?
Oh yeah, I mean, I'm pretty surprised. Not surprised by the popularity. I expected growth, right? I mean, you saw massive growth in GLD right when it came out of the gates too. It pales in comparisons to this, though. I think we always have to put numbers in perspective, right? We always compare like, oh, GLD did this back in 2006 when it launched in terms of AUM, but the total market capitalization of the stock market was a fraction of what it is today. So I think you have to look at it in terms of the piece of the pie that you might put in a strategy like this has grown in absolute terms so much more just because the overall wealth and valuation of the markets in general.
Yeah.
But yeah, it's been impressive to watch it flow. I'm not an expert in this space, so I don't get too carried away in trying to make predictions. I will say that if you look at something like GLD and look at the ownership of that, it's going to have a much higher proponent of being able to trace it back to institutional holders or 13F filers than you would if you're looking at IBIT or any of the other spot.
So you're ETFs. Saying there's room to run yet.
So there's your bull bear case, right? You can say, well, it's being driven right now. No, there's no real argument. Right now, the growth is being driven by the retail trader, the folks that want access, that are doing it themselves. So the bull case would be the financial advisors can't get access right now because of compliance, or they haven't coalesced yet. They just haven't pulled the trigger, and there's a lot more assets to be allocated. Or you take the bear case and say any sort of bear market will see just how much the hodlers, I don't know how you say that word. The holders are out there.
Hodlers.
I'm too old. Hodlers. There we go.
JC's a hodler. What about, can we bring up 18, please? With these single stock ETFs, it's the same idea as the engineering we talked about before, right? It's just sort of for at least for America, it's a newer instrument, but we're in a golden age of all these new instruments. You got the crypto, you got the single stock leverage inverse, income, this synthetic that. It's just what a time to be alive for us.
Yeah. So this one I find really interesting. So, synthetic income, you put that into a portfolio on the S&P 500, even the Qs, different areas of the market. You're building a portfolio to generate a set amount of income for your client who's in retirement. The strategies make a ton of sense inside of the ETF wrapper done right, can be very tax efficient. You are always going to give up upside anytime you start applying options onto your stock portfolio. That's just, unless it's of course leverage type concept. But if you're writing income, you're going to give up upside on these strategies. So I see the growth in that traditional index based or active management, diversified portfolio, stock space making sense. This one is, I'm not saying it doesn't, like there's people making a lot of money writing calls on MSTAR, but they're also significantly trailing the return of MSTR if they just would have held the stock, which is an incredibly volatile stock. So I question what's going on here. Single stock, writing calls on single stocks has been going on for years. And there are financial advisor firms that have made a living off of this, where you go to a client and say, hey, you worked at Google and you have 80% of your net worth wrapped up in this Google stock.
Yeah.
We're going to start writing calls on that stock for you and making income to start diversifying and take the income from that and diversify it into a more diversified basket or portfolio of securities. This particularly concept, like, I struggle to understand the income aspect of this strategy when by and large it's return of capital.
The logic is YOLO, right? I mean,
but if you're the YOLO,
isn't that it?
Why not just own the company, right? I mean, I think that's the piece people are failing here. I do not see these strategies protecting well on the downside when the downside eventually comes. And that's going to be an interesting piece to watch.
Yeah, JC, what's up? Didn't you have a question?
Yeah, Mike, I've got a question. You could take that one down. I got a question. As far as the ETF's market cap, total market cap is concerned, where's Mike? Do we have Mike?
Yeah, well, his camera's frozen, but we got it.
Oh, okay. Mike, my question to you is on the just the total assets. I'm very fascinated about that. Right now we're looking at, last I checked, close to 12 trillion in ETF assets, and we're looking at about 25 in mutual funds, something like that? Are those numbers accurate, you think?
Oh yeah, that's pretty much spot on.
Okay, nice. How about that one for the good guys? How do you think that's going to change over the coming years?
Well, it's going to continue to roll to ETFs in the sense that if you look at the ETF market, the two biggest seasons for flows tend to happen right before mutual funds pay cap gains distributions. People finally bite the bullet and sell, take their gains because they see a 7% cap gains. They're like, I might as well do it now anyway. Or you see kind of at the start of the year rolling into tax season, required minimum distributions, RMDs are happening, and people are rolling out of qualified accounts into taxable accounts and investing in a more tax efficient vehicle in the ETF. I don't see that slowing down at all. The big what if out there is what happens with respect to qualified accounts, in the sense that right now, very few companies out there where you can go out into your 401k option pool and see a bunch of ETFs that you can trade, right? It's all mutual fund based. So that piece of the market has been a pretty good protection to the investments. And honestly, there's a lot of really good mutual funds that are extremely cheap nowadays. That makes sense inside of a qualified account versus once you get into ERISA and the requirements around plan administrators and the regulatory regime, you got to be careful turning on trading tools for a bunch of your plan participants. Right or wrong, I'm not saying you should limit their options, but the rules do limit your options. And if you're a plan administrator, turning on the ability to start trading, day trading in your 401k account kind of protects that mutual fund structure. And cap gains distributions don't matter in a qualified account anyway.
Mike,
Well,
how do you feel about those regulations? I mean, if people want to day trade with their 401ks, who are we to stop them?
Yeah, that's a great question.
You know what I mean? Like, are you gonna go to the grocery store and stop the obese people from going down the cookie aisle? Like, are you gonna go to the bar at noon on a Tuesday and prevent people from ordering a shot and a beer? Like, at a certain point, restricting freedoms, whether we agree that it's a good idea or not, like, is that a dangerous route to go? Shouldn't we just, if they want to blow themselves up, shouldn't we let them?
I'm a free markets guy. I will say the one within the qualified account perspective, I do think that you're being given, the rules are written so that you can grow capital tax deferred. To that extent, you're getting a benefit. You can be limited in terms of options. I think to a certain degree makes sense, but to a very small degree. I'm generally with you. Let people go their own way. As much as you got to take the training wheels off at some point.
Yeah,
Well,
no, I mean, listen, I don't have a right answer. I'm just asking the question.
It's a great question.
Yeah.
It's one I struggle with all the time because I can yell, until I'm blue in the face, like, what are we doing with certain types of products or this or that or the other? But the reality is, generally you got to learn on your own.
JC,
Yeah,
the good news to you, JC, is we're all going to have private equity in our 401ks now, so that's cool. But no ETFs, just private equity.
Mike, getting back to the AUM side, how long? So mutual funds are about twice as much as ETFs, right? 25 to 12, right? Mutual funds 25 trillion, ETFs 12 trillion. How long until ETFs take over?
Oh, and put a number on it. I would say it's within the next decade. On the early end, 5 years.
I was going to say next decade. At this rate, we'll be there next year.
A lot of that money is going to be pretty caught up, though. There is the whole, step up cost basis at death. And when you look at the demographics of the mutual funds themselves, a lot of people, I'm sure it'll accelerate as the wealth transfer continues to accelerate. Like, we know how much of the wealth in this country is held at the, higher age groups. As that rolls over, you get your step up cost basis. I find it hard to believe the younger generation is going to take and put that into a mutual fund wrapper. So you'll see a continued acceleration, though. I think there's going to be enough within that 401k market locked up that it makes it slower than people think.
All right.
Right. So let's put it this way. I think most of the mutual fund money that was held in taxable accounts that wanted out of that has already been shifted. So now you're really dealing with a lot of the qualified money, and that's going to be a lot harder to transfer into the ETF structure unless there's a major rule change.
I got one more question, Mike, before we let you have. I mean, we have you here. I want to take full advantage. So I appreciate all the time that you've given us. But in terms of big themes, you got your eye in areas that we just don't, right? You can't have your eyes everywhere. What's one theme out there or something big that's happening you don't hear people talking about, you don't think maybe we're even aware of it? Like, what's happening out there that you think we should know about in the ETF world?
In the ETF world specifically, I would say that the biggest theme that we're watching is the concentration in the same names. And when I say that is we have 10 different thematic categories that we classify, and about 70 odd different thematic groups within those 10 broad categories. Like disruptive tech would have cybersecurity, it would have AI and big data, blah, blah, blah. You go through it and the top holding in every single one is NVIDIA, or you go through and it's just, so it's the repackaging of different names, different quantum computing, you name the theme in the innovative space, and I can name the top 5 stocks, right? And I think that repackaging is something to watch because it can create herd mentality, especially as these flows come into these strategies. Because somebody's like, well, I read an article about big data and AI, and I have to be in it. So I'm going to go buy a big data and AI ETF. And oh, by the way, I just bought a higher concentrated version of the Qs or things of that nature. Now, that being said, a lot of these strategies are really interesting. And, cybersecurity is one that's pretty pure. If you like cybersecurity and you buy a cybersecurity ETF, you're getting allocations to companies that are big. And we've all heard of a lot of them, but they're not huge weights in your major composites and indexes. So you really have to go under the hood with these strategies. But that would be the big theme that I'm keeping an eye on is as flows continue to ramp up in more niche strategies, is there a herd mentality to everybody buying the same names unwittingly?
Mike, I just want you to know how much I love you for saying herd mentality twice in the last 60 seconds. Dude, Russell 2000 futures speculators have their largest net short position ever. Hedge funds, most short Russell 2000 futures ever. They're long the NASDAQ. They're short the Russell 2000 to a historic extreme. When you talk about herd mentality, I mean, I've been pounding the table on that over the last couple of days just because that's been on my mind. So you're spot on, I think.
Awesome. Well, I think you are too.
All right. So fade JC and Mike. Take the other side. Stick with the herd. If
everybody go buy the same 5 stocks.
Yeah, right.
Mike
already did that, Spencer. That's why it's a herd. You see.
That's exactly right. Mike, thank you so much for the time.
Thanks,
today.
Mike.
We appreciate it.
Awesome, guys. Appreciate having me on.
All right. Hey, listen, it's 9:29. We do have.
Did you hear what he said, Strazza? Herd mentality.
I thought that was great.
I'll just say out Bill, such a Florida man. Hogfish sashimi is such a Florida man thing to say.
And Bill also mentioned gag grouper, which is delicious. It's a delicacy among the grouper enthusiasts. But I'll tell you, as somebody who likes to think that they've tried all of the grouper, yellow edge grouper, I think is better, even better than the gag grouper. Try yellow. I mean, Spencer, you're making a face. Grouper is the finest of whitefish. Okay. It's those buttery, big flakes that just fall apart and melt in your mouth. That's what grouper.
I didn't know New Jersey trout was a thing. That's a thing?
No, I think that's
he said trout was his favorite fish.
I think that's a reference to the baseball player, Mike Trout. I don't know.
Hold on. If I could just speak, we're talking about tax accounts. Yeah,
we have Kenny and we have Phil here, so let's just bring them both out. Wait, Kenny,
bring them out.
Okay.
I mean, there's my opening bell.
I'll give my
screw the bumper. We're just gonna bring him out. Bring him out.
Bring him out.
Kenny, are you here?
It's all right.
Phil?
Day's over. So what's up? Oh, Philly baby!
So this is great.
Crawl, Jefferson Crawl.
Dude, people don't even know about Jefferson Crawl.
Talk to me about grouper. I don't give a shit about the market. Never goes down.
Kenny, you look great. You look like you're in the mood for some grouper.
No, Kenny looks great. Roman looks like an accountant on summer Fridays, right?
Yeah. Phil, what are you wearing? You going golfing?
Dude, Phil don't golf.
He should though.
I'm breaking out the fine clothing for this crew right here.
Are you shopping at your closet?
You're a little fancy.
All right, so guys, listen, real quick. There are cheat codes and loopholes that we get in life. One of them is just being able to participate in the United States capital market system, right? But there are certain things people don't talk about enough that are just straight up freebies, like gimmies, right? One of them is the Roth IRA, okay? For somebody who likes to make big gains, you make 500%, 1,000% in a stock. You don't ever pay tax on any of that. I don't think this is something that will be around forever, but it's here now. You could fund the shit out of your Roth IRA, have it forever, and never pay capital gains tax.
Not going to be around forever. What?
Yeah, it would be a grandfathered system, right? If they were to cut it off in the future, you would still get your old Roth. What do you mean?
The only Roth I know is Hyman Roth. I'm out of here, boys. I got to go trade.
And there's
one
another
stock,
one.
Kenny. One
Hold
name.
on.
One name.
What a
One name.
reference.
Go.
What a
It's
sick reference.
USAR and SE right now, and
Like
ASTS. Let's go.
Are you buying the Rick's
ASTS just beat
Cabaret?
earnings.
I'm long USAR right now. Let's go, baby.
I'm
USA.
boring Kenny
USA.
with the tax talk, but it's important.
One more thing.
Hold on.
I just want to say, and Phil Perlman was there. Steve Strazza and I had a discussion. We had a debate about the C Limited. Steve Strazza liked the trade. I also liked the trade. And, Steve wasn't thrilled that we were both buying the same stock. He's like, there's no way this is going to work. Stock's up 20%. Steve Strazza, nice trade, my friend. Nice trade.
It's not what
done,
happened.
sir.
It's not what happened at all. Your account of the events is trash. But
All I
it's
know
a
is
great name.
we're both making a lot of money. Is there anything wrong with that?
It's a great name. One of my favorite stocks for the long run. This is the Amazon of the biggest, baddest growth story around the world. This is the
Not
Amazon
a
of
shipping
Southeast
stock,
Asia.
C Limited.
Not a shipping stock. All right, can I finish real quick? You guys are talking with Michael. Another hack that we have as American investors is to trade options in some of these retirement accounts. It's absolutely crazy that they let us do this. There are certain restrictions. There's some things that we can't do, but you could literally go to your IRA and buy calls and puts in a tax deferred or tax benefit account. That's crazy. People don't talk about this enough. I know people who make an absolute killing and then don't pay taxes on their wins in options trades that are going 5, 10, 15x. That's powerful. That's incredibly powerful. A lot of people are going to pay 40% on that. So just imagine the difference. If you go 10x on something, that's a lot of money that we're talking about. So that's not interesting to you guys. Fine. Phil, really? Like, throw me a bone here. This is
great.
good.
It's like, here's the thing. You could take advantage of everything that you could take advantage of that's legal, and learn and take the time and learn about it. If a guy like Steve Strazza, who's been around the block a couple times, is telling you to look into something, there's zero question you can learn it. You can look into it. I mean,
I'd like
that's
to piggyback on this. It's legal to take advantage of these things. There are certain male urges out there that's just science that we could take advantage of as well. If you could throw up slide 2 right here, right now, Rick's Cabaret selling off in the morning, coming back right at the open. This is a consumer discretionary stock, obviously. Phil Perlman, as somebody who studies human behavior, males have certain desires and urges that it is what it is, and there are ways to profit from that for our own portfolios here right at support. Is there anything wrong with that?
If this company, you have in your life, we all have multiplicity of personality, right? We all have different selves. And if you live in your own life and you want to be a certain way, that's fantastic. But then there's this other self that is the investing self, right? And the investing self could take advantage of a Roth IRA. The investing self could go buy a tobacco stock or could go buy a Rick's Cabaret. And, that's that part of it. Like, if you're going to go into the investing and you're not going to take advantage of every exploit that you can possibly take advantage of in the market, then you shouldn't be in the market. Like, you just shouldn't be there, because it's dog eat dog. It's all wolves. And you have to be playing as hard as you can. You have to be a warrior, fearless. And believe me, let me tell you something. You're sitting there right now. You're watching this. You're cushy and comfy in your air-conditioned couch, the whole thing. There is and you're so, you're 30 pounds overweight and you're so distant from your warrior, right? That warrior is inside of you. You close your eyes for 1 minute and you imagine your ancestors going back 3, 4, 5 generations, no air condition. They had to fend for themselves. They couldn't just go to the ShopRite and buy, anything that they wanted. They couldn't just order a pizza. They couldn't just order Uber Eats. And they had to fend for themselves, hunt, everything. That warrior DNA, right, is inside of you. So you're going to go and you're going to go play in the market. You're going to go be a personal self. You're going to be a dad. You're going to be a husband. You're going to be whatever in your home life. You have a morality, but you go into the market and you have to be a warrior. So if it's cigarettes, if it's oil companies, if it's whatever, if it's
cereal,
if you're
sugar companies, like right, candy and all that shit.
Listen, I own ETFs that have General Mills in it. I hate that company. I hope it goes bankrupt personally, but I probably own, 0.25% of my portfolio is probably Cheerios.
This is such an important point, though, for people to get. You have to separate the two. Like Phil's saying, you don't have to be a customer of these businesses, but the bottom line is, and we have the data, we've done the work. JC knows, like these Vice stocks tend to be really good stocks over the long run, whether you like it or not. They're going to be in the indexes you're going to own as a passive investor. And frankly, even if you're a stock picker, you're going to find yourself in them too, because they're chronic outperformers, a lot of these Vice stocks. So you have to completely separate. If you think the environment, the poor environment and the dolphins, we can't own oil and gas. No, you got to own oil and gas, right? Philip Morris is bad. I don't like tobacco. It's not about that. They pay a 5% dividend. They're growing revenues at 20%, right? You just got to own the stock and separate those two worlds, your investing world from your personal life.
Multiplicity of self. And if you can't separate it, if you can't say, hey, this is my human personal life self and this is my investing self, if you can't do that, then you shouldn't be doing this. Or you should just accept the fact that you're doing it at a disadvantage to everybody else who is against you, who is buying when you're selling when you're buying.
Yeah. Yeah. You want to do it as a hobby, right? And judge stocks based on, ESG things and whether or not they're good for the world or you like their products or services or not. You're going to lose a lot out here.
And didn't we have these green funds that all underperformed?
Yeah, but that was a hustle, right? So you had all these people who thought that losing money in your portfolio was a great way to save the world. And to Wall Street's credit, Wall Street saw it and took advantage of all these idiots. And rarely am I in favor of Wall Street shenanigans, but in this case, good for Wall Street. Taking advantage of these morons. Good for them.
Well, that's who you're up against. That's part of it. I mean, Akins was just talking about, you just had Akins on. He's talking about how Wall Street's packaging different types of ETFs, overlapping. They're going to package anything that sells. There's nothing bad about it. It's just nature. It's just the nature of the beast. It's just what
Smart
it is.
Business.
It's just business. Nope, nothing personal, just business.
ESG is a flawed philosophy at the end of the day, right?
We have to rehash this for the 1000th time.
Yes.
Sorry I brought it up, Spencer.
Just to think for a second.
Spencer thinks that losing money in your portfolio
No,
is a great
I'm
way
not
to
a
save
pro
the world.
ESG person, but we've gone over this though.
Well, you sound like it.
No.
You really sound like it,
Here's the
Spencer.
thing. Here's the bottom line
Sounds
about
like you
ESG.
own some
And we'll move
ESG
on.
funds.
No, I don't.
These are companies that
The
are
Green
telling
Party.
you that they're more focused on other things than making money.
Which is
Run
idiotic.
for the hills. A smart investor
Makes no
runs
sense.
for that all day, right? So that's what I'm talking about when I say it's a
Back to
flaw.
what Perlman was saying. You're a good father. You're a good husband. You work hard. You love your kids. You out your morals. And then in the market, all that, throw it away. Doesn't matter.
It's just a different part of yourself.
Yep.
Nader 28, Spencer.
Compartmentalization. No, I don't own. I've never owned any ESG funds like that. If anything, go the
What's
other
your
way.
problem, Spencer? You're
buy
out here
the
buying Fannie Mae. Like you think you're some good do-gooder?
Buy
out
the
here?
buy the cigarettes.
Responsible for the financial crisis.
When it was weekend at Bernie's over at the White House, it was the coal stocks that did the best. I mean, come on. You can't.
right.
I mean, that's just classic right there, Pearl Dog.
Yeah.
Hey,
All right.
I got one other thing for you guys really
Yeah,
quick.
please.
Listen, it's August, okay?
Yeah, it is.
If you're not eating tomatoes and watermelon, don't even, get out of here. Like, don't even turn your screen off. You know what I mean? Like, it's August. You go to the market, you get yourself some nice tomatoes. You don't know how to pick them out. You let the person at the thing pick it out, the lady at the market.
Yeah.
Watermelon, you don't know how to pick it out. You get the guy at the market, the greengrocer.
Yeah, but Phil, you just push on the belly button with the watermelon.
However you do it, it's all
Yeah.
good.
Push on
These
the
are
belly button.
two.
It's August. Watermelon, tomatoes. That's the time of the year.
Two of the all-time great summer fruits.
Great summer fruit.
Okay.
By the way, ATX saying JC always takes a stab at the libs. I'm not taking a stab at the libs. I'm taking a stab at the morons. You got dumb Republicans too. For the record, it's not about the libs.
Also true.
No, they're idiots on both sides.
Everybody's dumb,
Idiots
right?
on both sides.
Yeah.
To be
ATX
fair,
machine,
I'm very
idiots on both
equal
sides, bro.
opportunist.
Criminals and idiots on both sides.
Yeah.
Sorry to break it to you.
Yeah.
All right.
It's always
Here's
that way too.
Here's what we got today.
I was a little disappointed with myself, and I don't want you guys to make the same mistake. So I have a recess for everybody.
What'd you do?
Oh,
Kind of felt like an asshole.
let's find out.
So I was at the gas station the other day, filling up my gas tank, right? Just standard operating procedure. And I go into the little store. I was thirsty. I wanted to get like a bottle of water. So I go in and I'm paying for my water, and I stick the card in the wrong slot. And he goes, no, it's this one. I go, oh, my bad. And he's like, oh, no, that is for what do you say? That is for EBT only. I was like, dude, I don't even know what EBT is. Like, trying to be like, oh, I'm just dumb. This is too fancy for me. And I'm like, and I said it like in such an asshole way in hindsight. I was like, dude, I don't even know what EBT means. Like, I'm the idiot. And then he goes, oh, that's for food stamps. I'm like, oh, what a dick. So whenever you see EBT and you don't know what that means, it officially means electronic benefit transfer, which I guess is a nice way to say food stamps. I felt like such an asshole.
This is the announcement that you wanted to make on recess today?
Well, I don't want you to make the same mistake because I really felt bad. I'm like, you, dude, I'm such
I don't even know what EBT is. What even is that?
Do you know?
Yes.
Yeah.
Here's another guy. Here's another guy. No, the little people.
Yeah.
I didn't know. I felt so bad because the way I said it, I didn't say it to be mean. I said it like to make fun of myself. Like, oh, I'm not fancy enough for this. Like, I don't know what that is. So I said it like trying to it was self-deprecating, and it turned out to be the opposite. So that was my bad.
Did you pay for the next people? Did you like, hey,
no, I was the only one in the store.
I got the next EBT coming in.
I stood up, but I was the only one in the store.
You gotta get out more.
I know.
I
had never heard that in my entire life. I'm sorry.
Dude,
I don't know.
So the store I used to go to almost every day when I was living in the Florida Keys, which is a beautiful little Paradise Island ghetto, they had a separate line for it. Like, that's a thing.
The gas station had a separate machine for it.
Yeah, that's right.
I had never seen it.
At my little island, like, grocer corner store market, they used to separate back during the COVID days. This is when you knew government stimulus got out of hand. They separated the registers. One was just for Lotto, and that line was jammed all day, every day.
Just a tax on the stupid. Line. Now that I'm not afraid to say. That is a tax on the stupid.
I would just see it, and
I'm good with that, by the way.
So, yeah.
Okay. Thanks for the PSA, JC. We all learned something today.
Everybody knows. Thank you.
Phil Perlman,
I just want to give a shout out.
As a resident rabbi. What should I feel bad about myself? Am I really an asshole?
No, you should never. It's just life. You know what I mean? Just live you're a wonderful person. You're lovely, great dad. Just go.
Yeah, you're pretty good.
It wasn't intentional.
Hey, guys, I really love. I've been doing this a couple weeks now, and I really love the chat feature. It's fantastic. Like, I'm recognizing names. You down with EBT? Christopher Brown says that's a little tip of the hat. Yeah, you know me. That's like, dude, back
Christopher
in the day.
Brown wears the Fibonacci is my homeboy t-shirt in the wild.
Dude, that's awesome.
So Phil, you might not know this about our chat, but it's actually the best chat of all the chats on the internet. Our chat is so great. These folks have been in here coming and watching our show every day since we started doing it. So yeah, we get to know them. And they're great. They keep it interactive, and they're hilarious.
It's amazing. Every time I look over, I'm like, you can't shout out everybody, but I'm like looking over and laughing and chuckling at witty comments left and right.
If you ever see me laughing on the show, it's probably not at what JC said, because he's not that funny. It's at a comment in the chat.
Right. Beautiful. Spencer, beautiful, dude.
Yep. All right. Listen, if you were at the live event last week with JC and Vaz, you got an email already about how to watch today's stream. If you were not there, I'm dropping the link in the chat. 2 p.m. Eastern time today. They're going to talk through how Vaz just happened to find a 51% winner the day after the
Dude, we did the event. She walked us through the process. The very next day, it was a 50% winner in like I think it was like 2 hours. Not even. Maybe like a little over an hour.
Nice.
Not bad.
Didn't know that was going to happen, but it did. So the link is in the chat and in the description. Be there at 2 o'clock. Again, if you were there last week, check your email. You already got a link. You'll get another link later today before we go live. Also today on the channel, what are my options with Sean? At
So
noon,
good.
Yep, at noon Eastern time. And that's what we got going on today.
Twitter
So-
Spaces, we have a good time at 11 o'clock Eastern time every Tuesday. So that's a Chart Report sponsored.
Twitter Spaces.
We hang out. JC stops by.
Technical
out.
Tuesdays. You do the technicals first and then the tacos at night. And Phil Perlman, I'm going to say, I've said it before and I'll say it again. When you make steaks for you and your family, if you don't purposely make too much steak so that you have leftovers for tacos the next day, you're doing it wrong.
Wow.
Yeah.
Pro
100%.
tip.
Good to know.
Sorry,
And-
not sorry.
And
And
you can have it cold for lunch the next day, just like right out of the fridge. I don't care.
Yeah,
all good.
Cubans do that. It's called carne fria.
There you go. Carne fria.
Nice.
And Jeff Mackey going live at 1 o'clock as well. Jeff Mackey's going to be a busy man the next few weeks. There's a lot happening in retail land. We had CPI this morning. There are implications for that. So a lot going on in Jeff's world. That's 1 o'clock right here on the channel. Thank you for watching, everyone. Tomorrow on the show, we'll be joined by Riley Roseby. It's going to be a good time.
Ooh.
And we'll see you
Really
there
on
for that.
tomorrow?
That's tomorrow.
Watch.
Woo!
Hey, guys, watch the bonds today. Watch the bonds out here today.
Why?
Nick Timoreos is tweeting, we're digesting the CPI. I still think we're seeing a delayed reaction from the jobs report. Things are moving out here in the bond market and the interest rate sensitive areas of the stock market.
All right.
Homies don't look great this morning. Regional banks do.
Let them dance, dog.
Let them dance, dog.
Thanks for watching. Drop us a like. See you later.
YOLO
Adios.
responsibly.
I can't take no loss. I don't even know what it costs. I hit the ground, then I go